It might not look like Christmas outside, thank goodness, but if you are on a trading desk, it sure feels like Christmas. That is according to our next guest, who says that it has been a very quiet week. But she says we may be facing a few bumps in the road over the next couple of weeks on the equity markets. For more, we are turning to Diana Avigdor. She's head of trading with Barometer Capital Management. Diana, great to have you with us today. Thanks so much for joining us. And
thanks for having me.
We can't possibly be referencing the holiday time period, can we?
I know, it's crazy. It's not too far away, though, 3-4 months. But it's quiet, like it's comparative to Christmas. It's very, very light. Yesterday, for example, on the TSX, we had about 85% of normal volume, and third of that was in about 3 stocks. And the U.S. is even lighter as we go into both countries into Labor Day weekend and the end of summer, kids going back to school, parents taking some time off. So it's very, very quiet.
But Diana,
we have our earnings.
We do, but let's first talk about then what that means in terms of what you're actually seeing in the marketplace, because absent today and yesterday, we really did see the market continue to grind higher. What do you think is the true sentiment in terms of the underlying moves here?
Right. So, the market yesterday, for example, moved a range of 30 beeps, really not much of a wide range in the market. Today we opened quite low, and as you can see, it kind of grinds higher into a flat level over the course of the day. I think that there is a level of cautious optimism in the air, but when you look at NASDAQ, for example, NASDAQ 100, we've had a really, really long streak without any kind of real volatility, and there are some things out there that do affect us, like geopolitical, some negative European numbers, but we've had some great U.S. economic numbers. Now, from our perspective at Barometer, we do a lot of long-term and short-term indicator work, and the short-term breadth models are deteriorating a little bit. Now, it's difficult to establish why. It's possible that it's because the week is so quiet, but we like to listen to the market and do what it tells us, and we're going to be watching for that. In addition, in September, you guys were talking about Alibaba. I think that is a big thing that's going to happen in the tech market. It's going to suck a lot of money out of other investments to finance the biggest IPO that the U.S. has seen. So I think that we have those things moving around in September, and if you had some money on the side wanting to invest, which we are bullish long term, I would suggest that you wait a couple of weeks.
Diana, it's interesting though when you take a look at the potential IPO of an Alibaba, and as you say, it's going to suck money out of other investments. I wonder though how much it will, if in fact it's if it has a hot demand. A lot of people, of course, won't get their fill in their orders for the IPO. So do you really think that we're going to see movement out of other sectors, other stocks, into Alibaba if people can't get their fill?
I don't know that it's going to suck money out of other sectors, but for example, if you are a dedicated tech fund and you want to get an X amount of Alibaba, you don't know how much you are going to get. You're going to make room for that in your portfolio. And if you really like it, because it's so great, you're going to be in there in the aftermarket, and you're going to want to source that 2%. If you're fully invested, you're going to have to sell. Maybe you're going to source that 2% out of your other 40 names on a pro rata basis, or maybe you're going to pick your weakest. It's up to the portfolio manager, but you'll have to make room for it.
So Diana, then the message to our viewers is that perhaps you'll see some weakness in some of the, better tech names.
Yeah, but short term. You've seen this summer, and you've seen in the beginning of the year as well, money flows have been very positive, with the exception of that one or 2 weeks this summer. Money flows are important. People are not fully invested. They're cautious, which tells you that not everybody is in. When it's a frothy market, everybody's making money and everybody's happy and everybody's bullish. They tend not to be cautious. So I think that the volatility and the inevitable kind of 2 steps forward, 1 step back situation, I do think it's going to be bought. We have some good economic numbers out of North America,
right,
which is leading. We've had a good earnings season, and despite what our banks are doing in the last few days since they started reporting, I think that's just money rotation. The banks have reported a decent quarter with dividend increases, but they've gone up so much, and people like to take profits and rotate and rebalance.
Diana, let's talk a little bit more about Canadian earnings and where you do see opportunities. What names in particular look interesting to you, your team, your trading desk?
Right. So we at Barometer own TD, for example. We like the U.S. We like the banks that have exposure internationally. National, I agree, reported great numbers, notwithstanding. But you know, every quarter you have your list of preferences, but you're not going to change your portfolio every quarter. Generally speaking, you saw TD's earnings were good. U.S. growth, banking growth was good. Loan growth was good. You see the best economic data numbers coming out of the U.S., so we like that exposure there.
We have to leave it there, Diana. Great to see you. Thank you so much for joining us.
My pleasure. Thank you.
That was Diana Avigdor. She's head of trading with Barometer Capital Management.